What is going on, penny boys and gals? What's going on, stock traders? And welcome to our Wednesday live stream. We do this every Wednesday, 4 p.m. Eastern, and I am live as always with Pookie's Revenge. How are we doing, Pookie?
Pookie's around. What's going on, man? It's Wednesday. That means we're halfway through. A little more than halfway because this week is a short week since we have the holiday on Friday.
Perfect. I just had to turn you down the Discord. I'm like hearing two Pookies. I'm like, oh no, that's too many Pookies. For those of you who are watching on YouTube, we also do this live on our free trading Discord. I'll go ahead and pop a link at the bottom of the screen there. It's scrolling on the bottom. But let's go ahead, pop up your screen next. What are we looking at, Pookie?
I don't know anymore. No, I'm just kidding. Yeah, obviously there's been a little bit of red in the market. So I'm going to go ahead and pull up SPY just to show what we've been dealing with the last 2 days. So it's important to take the market movements into context. So I'm just going to erase that vertical line there. So here was our kind of value range for SPY, and we watched it dip down to the second line and then bounce and then rip right through the top half of that. It's been on a solid uptrend, and we can see that the volume is falling off here as we approach this top. And we started to pull back pretty, quote unquote, hard yesterday. There was a lot of red in the market. And again, today, we just have like a doji, right? So this isn't really as bad as it looks, but the market did need to cool off for a little bit. So what we've seen the last 2 days, and combining that with a short week, of course, is some pretty hard sell-off on some of the smaller cap stocks. So what I was looking at specifically was FIGs, which was very, very close to my stop loss, which is why I like to move it at least 2 cents below a whole dollar amount, because I wanted to watch the $6 level as the value. We added here on the way back up. The overall setup here was going to be a potential gap fill to the upside. Which I'm still in it. So I'm not canceling this play. I'm not stopping out or anything. I just want to highlight the importance of moving your stop loss just a couple cents off center because this came down and hit $6 on the dot. And my stop loss is at $5.98. And then it immediately pulled right back up off of that level. So if you constantly find yourself hitting stop loss and then getting stopped out right before it runs, before it pulls back up, that's a pretty good little trick. Just offset it by a few cents because you don't want to fight at $6 with everyone else. I'm just going to hang out on the other side of it and let them take all the punches to the face. So this one is one of many. Obviously, I'm just watching for this gap fill here. CCO, again, a lot of these are just pulling back down for the last 2 days. You can see this one fell back pretty hard as well. But all of these have a major support level nearby. And that's what we're playing. We're just trading the pulls off that support level. And you can see here it's pretty low, but I still waited for the bottom to form, pull up, and then do it again. So we're not chasing it up here. We're getting it nice and low. This one obviously just went up a little too quick. I had to resolve the price action. So we'll see if that can form a support off these levels and bounce again. Otherwise, that was an easy 15% on the table. I'm simply holding it to a higher target. So it is what it is. And then, of course, there's Z, which is a much, much longer trade setup. Same setup, right? We're just trading these gap fills, unresolved price action. But we're just waiting until after it starts to pull back up rather than trying to catch them on the way down and guess. So that's all I've been doing. I think this one has like an 83% profit target on it. So it's going to take a little while. Patrick wants me to say it 3 times fast. No.
Yeah, you got to think about that one this time.
Yeah. So I've just been watching the market when I can. Obviously, I'm pretty busy on the development side, so I don't really have a whole lot of time to dedicate to the market. But this is also a stream where we encourage people to ask questions. So,
yeah, that definitely, the name of the game here is for us to just be answering any questions the members do have. So if anyone in the chat does have any questions, definitely feel free to ask them either in the free live stream chat in the Discord, or you can just ask it here on the YouTube. We have someone typing. Can we have some advice for investing with you on Ethereum? It's from Staros from the chat. The Discord. Are you currently trading anything in Ethereum crypto wise?
No. I live in New York.
Oh, right. You can't even.
So, yeah, I mean, I can, but it's difficult to trade here, especially with my own individual circumstances. Like I obviously can't run a VPN all day because I'm doing development work. So New York just has some weird stipulations and stuff. I don't want to deal with potential tax ramifications if they change the tax code at the end of the year. Just stuff I don't personally want to get involved in, but that doesn't mean that there's not an appropriate time and place for it. I'm not sure if you're familiar with BTCJ or AmaJama. They are both very heavy into crypto, and Jay is a guru when it comes to investing in crypto. So If you haven't seen his streams, I encourage you to take a look at the events schedule right there. As far as advice, we have to do a little disclaimer thing. We can't really give you advice. We can't tell you when to buy and sell. We can only share insight and education. So I can't legally tell you what to do, but we can give you a lot of education and tell you what we would do. As far as Ethereum itself, I wonder if I could pull it up here on Webull. Are you new to investing completely, or are you just new to crypto? Because there's a drastic difference between those two answers. Completely, okay. Is there any particular reason you're attracted to crypto more than equities and options?
For those on the YouTube, we're also on the Discord. We're just answering some questions in the chat.
Oh yeah, I forgot to paraphrase.
They're like, "What is he talking about?"
I don't know. I'm talking to myself, man.
Ethereum's currently trying to push.
Yeah,
it's pushing right now. Actually, if we look at the chart, I'm looking to see if we can break that 2K. I think it's like 2023 is around what I'm looking at.
Yep. So there's a couple of value levels here on Ethereum specifically. So obviously we have our diagonal trend line here. It broke, retested, and then it's starting to pull up. But the real value for a lot of these is going to be those horizontal structural support and resistance levels, and being able to identify the gaps, the value gaps, right? So if you look at where I'm placing my lines, this is just one particular approach. There's many different ways to analyze a chart. So please don't just blindly just trade levels, because that won't always work on every single chart, right? Some are structurally respective, some are not. In the case of Ethereum, it is. So we can identify these levels and then just trade the wider gaps. So what I'm looking for when I draw these levels are things like this beautiful double bottom here. It's tested both times here, and it's had violent rejections off the level. And it's also tested this same level here in this head and shoulders as a resistance level to the downside, as well as right here and the current level that was breaking. So right now, if I were to look at the size of the gaps between these two levels, it's bigger than the gap down here that we're just breaking out of. And it's bigger than the one at the top side. So this is the ideal gap that we'd want to trade for potential. So then we can draw some smaller potential like short-term profit lines, right? So it's unlikely that we're going to see a clean rip straight up, in my opinion. But we do have a lot of bullish indication here. So I have the RSI and the MACD both up. They tell you the same exact thing. So don't ever feel like you have to use both of them. I just have it up here so the price doesn't get all stretched out. So right here, we're still below the halfway point, and that is a resistance level. So I think what a lot of traders are going to look for specifically with this chart right now is they're going to see this break up here. We've already had the retest. Then they're going to look for a pullback, and then a potential break to the upside, and then something like that, right? That's typically what they like to look for when it comes to these. The trick here is just not to ignore this level here, because that is in the way. Oops, drawing lines here. Now, if this comes back and goes for a retest of this level or slightly above it, right, we can take an entry to the upside as long as we're halfway between this one and this one, right? Right now, if we're trying to trade this line, this bottom line to this top line, this big gap, we're still below the halfway point, but this midpoint hasn't been tested yet. So it may just break through. It may pull back and retest the support line. We just don't know. But as far as crypto goes, it's slightly different analysis than a company, right? There's not the same structure. There's not the same catalyst. You can't really look at the volume the same way. Crypto is 24/7. It is an alternative to fiat currency and other forms of currency. So you really need to take the global crypto picture into context when you're dealing with these, because they can have very drastic effects to very simple headlines, which we saw with Dogecoin, for example. Obviously, Ethereum is bigger, but they do have their problems of their own. So we need to be very careful.
Dogecoin recently was just had a little bit of a pump of its own thanks to Mr. Elon Musk again. Elon Musk at it again. I think on Friday it was his lawyers were in court.
Yep.
Sorry, I got somebody just calling. All right. Friday, I believe their lawyers were in court trying to basically get rid of this. I think it's like a 238 million or billion dollar case against Elon from investors, saying that he pumped Dogecoin, even though knowing it had no intrinsic value. You can see that pump right there on the middle of your screen is when that happened. And I guess he didn't learn his lesson, or he just doesn't care.
He doesn't care.
Yeah, he just doesn't care because just recent, I was like maybe like 2 days ago, he changed the Twitter logo from the iconic
Yeah.
blue bird to the Dogecoin logo, and the Twitter pumped again.
Yep, that's what happens, man. He's it doesn't take a lot, right? Crypto is largely speculation and hype. So if you get some sort of catalyst like that, especially with a bigger name attached to it, you're going to see some pretty big moves a lot of the times. I don't know. I pulled that one up. So you need to be careful with crypto when it comes to trading that versus trading equities, which are a little more stable. I don't want to say stable. They're a little more grounded in company specific.
I think it's
sector.
It's safe to say that they definitely are more stable. I mean, crypto. Here's the deal. I'm very, very heavily involved in crypto Twitter, so I know firsthand that crypto investors, comparatively to stock investors, obviously not during the whole Robinhooder time, but just in general, are typically a little bit more emotional, a little more have a degen mentality. To them, very, 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 very much more on the social media savvy part, which means that they get the news much quicker. Than your stereotypical stock investor. So there is a lot to be said about news with crypto, because people see they're always on Twitter and they see these big headlines everyone's talking about in the Twitter spaces. So it's easy to get kind of hyped up with that when it comes to crypto. But,
also that kind of that immediate spontaneity with headlines and things like that, that's a double-edged sword, because I live in New York, so I'll probably be the first one that gets hit as far as states go with more crypto regulations, which I personally believe are necessary long term, as long as they're minimal and non-corporate, if that makes sense. Like, I don't want the government to just step in and be like, just crush it. But I do think that there needs to be some protections in place for certain investors. So with that said, if the government, and they can at any time, if they decide to impose some sort of heavy regulation, which we've seen with foreign markets, like India, China, where they just crack down and destroy crypto almost overnight sometimes, we need to be very careful with that, because there's a lot of money involved in crypto to the upside and the downside. So if there is something that spooks a lot of people or upsets a lot of people, particularly the larger investors, not just the algos that are kind of moving the price up and down between levels, that could potentially hurt a lot of people. So you got to be very careful. And there's also the exchanges themselves. I forget which one recently just kind of locked everyone out. Your boy there, Sam.
Was it? Oh, FTX.
Yeah.
Oh yeah, FTX had a whole. It wasn't just locking people out. He basically took everyone's money and decided to go bet on the horses with it, basically.
Yeah, pretty much.
But yeah, I mean, there's a lot. Yeah, even the exchanges themselves. There's a lot less regulations in crypto. Like you have your banks when it comes to stocks. You have your securities. These are regulated. Very, very heavily. You saw the banks when Silicon Valley Bank collapsed. FDIC insured up to, how much was it, Pookie? Was it 200,000?
250K, but there's exceptions.
With exceptions, of course. But crypto, when FTX went down, there isn't such thing as that. So when it comes to crypto, these exchanges, they are relatively new. There is a lot of links out there that you don't want to be clicking. And there's a lot of ways to lose money in the crypto space without the right education, which we do teach. We do actually have a whole crypto education section in the Discord that you can definitely check out. But it is definitely very, very different, I believe, than stock trading.
Yeah. And that's by design, right? Because they don't want it to be as institutionalized and all that, which makes sense. I get it. I support that. But there needs to be a balance. It's a paradox of tolerance situation in the crypto world. So you just have to be careful and just be mindful of what you're getting into. Make sure you know things, and make sure that you have protections in place at all times to protect against things you don't know.
Right. And especially now, the big thing with crypto that everyone's talking about is, the bank, not only the banks collapsing, even JP Morgan, and I'm saying collapsing with quotes. I don't believe that it's the end of the world when it comes to banking. But JP Morgan's CEO did, in his recent chat with the investors, he did basically say that there is going to be some longer term repercussions, and it's definitely not over yet. People are also talking about overseas, with not only OPEC, but also just these, Saudi Arabia is saying that they know, the Crown Prince saying he no longer wants to basically adhere, like see America as someone worth bending over backwards to, basically, is what he is not really how he put it, but that's the way I took it. And there's a lot of other countries out there that are also, over, and we're not going to get into politics, but over in the West, who are starting to maybe not rely on America as much, maybe not rely on the US dollar as much. and people are in the crypto world are definitely seeing this as a possible opportunity to invest in Bitcoin, put your money in Ethereum. The US dollar is going to this. Yeah, exactly. So
Yeah.
I personally think that if if the US banking system collapses, then I think all finance is not going to be doing so well. Personally, was kind of I see both sides of people who are saying throw your money into Bitcoin, and also people who are saying it's still unregulated. But for Starus, and we have some great questions in the chat right now. I definitely would recommend getting started with the education that we have, like with Trading 101. That's good for both crypto and for stocks. We go over the trading psychology, the risk management, how to build a plan, which can be used in all different sectors, whether it be stocks, NFTs, real estate, gold, investing in gold, whatever. It's all the same mindset. You can even trading or investing in toy cars and Pokemon cards. Exactly. It still has that mindset of a trader's mindset that we all need to learn, because it's easy to get emotional in the market. So definitely check those out. Yeah.
Yeah. And I'll tell you right now, a lot of, and I say this on every single stream, I think at this point, one of the biggest pitfalls new traders jump into is wanting to learn everything all at once. And they start with technical analysis. That is very dangerous, because not only are you wasting time, you're wasting money and sleep, because you're not going to sleep good at night. You're damaging your mental health because you're going to not see progress for a long time. And a lot of times we see people come here because they've been hurt by YouTube gurus and all these bulletproof strategies, and it doesn't. There's no shortcuts in the market. So rather than digging in and trying to find the perfect strategy and things like that, and learning all the indicators, which is great, I'm not saying don't. Just don't prioritize that as much as learning your psychology and having a solid trading plan, which prioritizes risk management. And that's really where the education comes in, into a much safer area, a safer aspect than just trying to learn technical analysis and charting and stuff, because there's 10,000 different ways to chart. There's literally hundreds of thousands of different indicators. They all say the same thing. It's just which ones you're the most comfortable with and most confident in interpreting. And ultimately, they don't predict the future. So you can identify tipping points and trends. You can identify all the shifts in volume. You can identify the algos. You can identify the levels and identify all the patterns and setups and candles. And you can use footprints and all that good stuff. But it's not going to get you anywhere if you don't have yourself under control. And 90% of trading is psychology. It's learning how to get out of your own way. And I know a lot of newer traders are very eager to make money. They're eager to jump into things, and that's where you're going to get hurt. So if you're asking what we recommend you trade first, I would at least suggest trying paper trading, because that way you're still getting the experience. You're getting the position size management discipline. You're getting the portfolio experience, I guess, but you're not putting real money and real risk on the line at the cost of not making real cash profits. So if you still want to trade alongside that, I would recommend maybe just stay a little bit small. It's always safer to stay small. But again, I can't legally tell you what not to do or to do. It's just what I would personally do if I could start over.
Yeah, and honestly, though, that's a good point. I mean, and for those of you who are in the YouTube, Struz is asking, I have a question. If you're new to investing, what do you recommend to trade first? Honestly, and this could be an unpopular opinion, I don't think it really matters what you trade first.
No,
because I believe that no matter what you do trade, and this is just talking from experience, if you're going to be starting trading, chances are you're going to probably end up losing pretty big within the first month, 2-3 months. If just because this is how trading is, we get excited and we get that first win. And then we feel like we can never be stopped, but even especially after that second win, it's like, all right, this plan works. And then you throw a bunch of money in because we're still relatively new. We don't understand how the roller coaster works yet. We haven't done that yet. I believe whether it's options trading, day trading, swing trading, NFT trading, there's a lot of NFT DJs I know who lost a lot of money. Crypto trading doesn't matter. The chances are it's going to be a learning experience, which is why Pookie is so right. Paper trading, we're starting off small. That's all that really matters. It doesn't matter where you start. It just matters that you start small, so that when you get that roller coaster down, it's $50 loss as opposed to a $2,000, $3,000, $4,000 loss, which is so much harder to get out of. That kind of hole, as opposed to just learning with paper money. That's not your money, which is I think huge. Yeah.
Just to add to that, I haven't had the best life. Like, I had a rough childhood. I had a rough work history. I ended up dropping out of high school, dropped out of college twice. It's been a little bit of a struggle. So my story is slightly different than I think a lot of people. I took all my life savings And my billionaire boss at the time encouraged me to get into stock trading because he realized that I had good work ethic, and he's like, "You deserve better," but didn't tell me how to do anything. So I lost 80% of my life savings within a month. I was very frustrated, but then he taught me some stuff, and ultimately it took me multiplying what I had left by 20 and then losing a quarter of that again because I was putting all my emphasis on making profits and not on managing risk. And once you shift your mindset from not making your profits bigger, but making your losses smaller and letting the profits happen, it will make a difference in your trading. The goal, as Duck said, or Matt, sorry, 90% of traders wash out within the first 2 years. Your goal is to keep yourself in the stock market long enough to learn how to survive.
Yeah.
And then you grow from there. You can't do that if you wash out within a month like I almost did. So I have a well-diversified set of portfolios. Some people prefer to day trade. Some people prefer swings. Some people prefer just straight up valuation investments. It really depends on you as a person, and that's part of the education as well. You have to learn your personality traits. Some people are fast, impulsive. They can think quickly. They can manage risk in the moment. They can make decisions. Other people need to follow a more conservative plan, and they need to have everything kind of spelled out ahead of time, which you can find a good balance of both. I think everyone should have a plan no matter what, but it just depends on you as a person, really. Ultimately, it's how you manage your portfolio and how well you control your risk exposure. It doesn't matter what type of equity or what type of security you trade or how much your account is. It's ultimately how you manage that risk exposure.
No, that's a huge stat though, that 90% of traders end up washing out. And it's true. And you're
yeah.
right. Like the goal is just to not be, it's probably the 10%. It's not the goal. Like my goal isn't even to be, to be making money the first year. Like when I was stock trading, I know a lot of people, their goal is just to make their money back. That first year once they start learning. And this is how the market is. It's we're talking about making money sitting at your house. It's not going to be easy. If it was easy, we'd all be doing it. We wouldn't be here doing discourse. We'd all everyone would just be stock trading if it was easy. There'd be no one out there working in the real world. It's meant to be hard because it's a really, once done right, it's a really great tool to have. But just like, you go to college for 4 years and then you go to get your master's for another 4, if you're going to be really, be a master at your craft, it's going to take some time to take,
you got to
for
pay that
education.
tuition.
You got to pay that, not even pay the tuition, but even just put the years, and I'm saying years. I'm not saying it's going to take, 5, 10 days, a month, 3 months. It might take a few years, just to really get it down and consistently get it down. I'm not saying have one good year, one lucky year.
Right.
I'm talking about consistently being able to do it where you can say to yourself, all right, I feel comfortable, dropping my hours of my, 9 to 5 down, to half because I can consistently make X amount of money. And then from there, maybe I'll leave the 9 to 5 or whatever it may be. I think that is so important is this that 90% do wash out and then just try to be at 10%.
Well,
you're 100% right.
That's why, we have to keep into context, like why we're doing this in the first place. Some people just want gas money. Some people want money so they can go to the casino and lose it. Some people want to make this a serious lifetime and supplement their income and eventually replace it. All of those share a common denominator, and that is that you can't do it if you're not here. And I don't mean in this Discord in particular. I just mean you can't do it if you're not in the stock market. Nobody should become a slave to the market. You still have to live your life and keep this in context of what it is. It's there to help you offset your finances so that you can grow over time with passive compounding gains. So, in order to get to that point, you have to survive yourself. The market is set up to take your money. That's just the way it is. That's why 90% of people just wash out. They know exactly where your pinch points are. They know your max pain level. They know your impulses. They know what you're likely to chase into, what you're likely to hold. Our goal as educators is to help you and give you the tools to override a set of default behaviors that you're given and reinforced over a lifetime to be less impulsive, more objective, and more risk management oriented. In the meantime, yes, we have the alerts, and you can trade them. They have clear, entries and stops and all that, but it's ultimately up to you to determine which ones you take and to properly allocate your funds in your portfolio to manage those trades and to respect the levels and to be able to only trade what you're confident in and study what you don't, because you're still in that phase where you have to put in the effort and the time and the education. I really wish there was a shortcut.
I mean, that's a good point, though. Talking about the alerts, some people think that, these are alerts. I take the alert, I'm going to make money. These alerts are being alerted by people who've been doing this 20, 30 years, even maybe 10 for some of them. They've been doing this for a long, long time. So the way that they trade is going to be a little bit different than someone who's been doing this for 3 months to a year or less. So you got to realize that, not every alert is going to be for you as a new trader.
Yeah,
you need
don't
to
take them all.
Don't take them all. Take the ones that make sense to you. It's like, oh, I understand this alert, therefore I'm going to take it. If you don't understand the alert, you're like, I just personally wouldn't invest in it. I want to understand my investment, because that way I can understand why it would be valued more in, if there's a swing trade, 3 months, if it's a day trade later on in the day. I actually understand the trade. I can understand why someone else would buy it for more than I just bought it. If you don't understand that, then you're kind of getting into the trade blind. It's like, Tony Hawk, he's a great, Tony Hawk is a good example. He's a great skateboard. I don't know much about skateboarding. So
he's not going to do it at nighttime.
I want to do like a bike riding example. I don't know any bike riders, but Tony Hawk's a great skater. But if you're following Tony Hawk on your skateboard, and you don't understand, like, hey, this is going to be a dangerous stunt he's trying to do. And you try to do what he's doing, just see he's great, and you're following him like step by step, doesn't mean you're going to land that. You can fall off and hurt yourself pretty bad. So you have to understand, oh, this is a trick I can do before trying to do it.
Yeah. Also, I want to answer 2 questions really quick. So first, Staros asks, they say that when you have a successful friends, you will have a successful life, and when you have broke friends, you will have a broke life. Do you think that's true? I personally do not, only because I've been on both ends of it pretty far, extremes on both sides. And ultimately, I think it's you as a person in context of your circumstances. So if you have broke friends, that typically means that your environment tends to attract and maintain a certain type of behaviors that lead to those people being broke, whether they're intentional or not. It's just circumstance. So there's some individual control, some is environmental, socioeconomic, whatever. Now, when you're surrounded by quote unquote broke people, that does limit your opportunities if you're trying to progress. Now,
because your net worth is your network is your net worth. The people you surround yourself. I believe the people you surround yourself with definitely have an effect on how you're going to do. As far as I'm not gonna say broke life, because I don't know. I mean, if you're talking just financially speaking, then maybe.
Yeah.
But if you're around people who have money, chances are you're gonna it's gonna rub off on you because of opportunities.
Yeah, and they're going to shame you out of things that are wasteful.
Yes. People who've been there, people who have money. I'm not talking about like the trust fund babies and stuff. I'm talking to people who have been there, done that. People like Austin, who's seen struggles and then came back from it and made a lot of fucking money. I'm talking about those kind of people. Those are the ones who I want around me. People who who understand how to make money.
You just said it.
Yeah,
you just hit it on the head. It's not the status of the people, it's the type of people. Because I will also tell you that you can be surrounded with completely successful people and they can all be rich and they will still, or they can still edge you out completely and make you broke. So it really boils down to the quality of people and the abundance of opportunity or the lack of opportunity that you have within that network. So
rich people are made off of the backs of poor people. So
yeah.
There is that. You don't want to be the people. If you're around those kind of people, the ones who are making money off of the poor people, they probably make money off of you. If you're around people who are trying to bring people up, even though while they have money, those are the kind of people. Like you said, it's not about how much money they have; it's about how they're using it, how they got there, and what they're going to do with it.
Yeah, it's either mutual benefit or it's attrition, and only one of you is going to survive if it's attrition. So, and the second question, sorry, I watched your video about drop rate method and want to try it as you've had bad luck with the alerts and the normal target stop levels. 2 questions. So, are there any types of alerts to not use your method on, like no day trade alerts, no watch list? And what is your stop point if you've already had all your buy-ins? I've tried some paper trades using your method, and several stocks just kept going way down and never got to a winning sell point. So what this is the result of a couple different approaches to trades. And this is something I want to clarify really quickly. First off, we are no longer doing the drop method for a lot of the trades, unless you're containing it within the entry to the stop loss. Back in January, we decided that it was more beneficial to the members, especially the newer traders, if we didn't let them decide when to place those buys if they were building down a position. Because we have the experience, it just makes more sense for us to kind of do the heavy lifting. So we're really not using the drop method anymore. But that was sort of a get started guide. Here's some risk management built in because you're forcing yourself to slow down when you do place those buys as something is going down. Now, with that said, there is a set of criteria that we don't want to base, like we don't want to take every stock and try that with, or any system, right? Because similar to technical analysis and certain strategies, it's not going to work on every single stock. So when it comes to those types of trades, you really want to look at the company. You want to look at the potential that stock has to go up. And it doesn't matter if you're doing 1 buy or 10, which I wouldn't ever recommend doing 10 buys, but I can't tell you not to. Certain trades have certain setups, right? The setups are based within the trend. So I don't want to go too far down a rabbit hole, but every setup depends on a trend, and every confirmation depends on a setup. Okay. So if you're looking at, let's say, the watch list in the morning, for example, those are momentum breakouts. You're looking for a break above a certain level. Those you're not going to build down at all because you're just waiting for it to get above that level, place a buy, place a stop immediately, and letting it rip if it's going to. If you start to build down a position like that, what you've done is essentially buy at a resistance level, and you're just going to keep averaging down, and it's just going to keep going down and down and down after a hard rejection of that level. So it's a little tough to assign these generic rules for every single trade, which is where we put rules on our portfolios to kind of eliminate the need for that kind of subjectivity. But yeah, so basically we're only really doing that in the advanced section because those traders have a little more education, a little more capability to build positions down safely. But if you're a newer trader here, there's really no need to do the drop percent method. In your case, if you're struggling with those entries, targets, and stops, and it's been more than like a day or two, right? Because we've had a pretty red market the last 2 days. Then we can talk about your strategy and your trading plan, maybe when you're entering them, percentages that you're putting into the portfolio, into the positions, and things like that to help you manage that risk until you've narrowed it down to a little bit more successful selection of alerts. But yeah, no, especially in this kind of market, stocks are not guaranteed to ever come back up. So you got to be very careful when it comes to which stocks you try to build a position down, whether or not you're following our alerts or not. And yeah, as if you're trying to trade options, for example, you can and oftentimes will lose 100% of what you put into it if you try to average down. You need to be very, very careful with options because it's not like stocks.
No. And that actually brings us to the next question. This is from the YouTube chat. They were talking about how they're new to trading, starting with a small account, $1,000, following day trade stock alerts, caught a few winners for a little profit and a few stopped out for much larger losses. Risk reward out of whack. Is there a way to make this small account work? So honestly, kind of like we were saying, like I was saying before, it's 9 out of 10 times you're probably going to end up losing money your first 3 months to a year trading. And so that's why I'm like, it doesn't really matter if you start off day trading, swing, options, NFT, whatever. But that being said, certain assets or certain types of trading is more risky. So the chances of that happening is going to happen a little bit quicker if you do such like something riskier, such as options trading or day trading or leverage trading. They are riskier. They have more reward, but they are inherently riskier. So because there's more risk involved, the chances of you getting that big loss and that big hit are going to be a little more likely to happen a little bit sooner than later. So I personally, when it comes to they're saying have they starting with a small account but new to trading, I personally wouldn't go too heavy into day trades. This is me personally. At least if the small account, I guess if that small account is a small portion of what you have to trade with in general, and whatever, if it's like everything's relative, I guess. But I personally, if I had only $1,000 to trade with, I wouldn't go day trading with it personally. What about you, Pookie?
So I was actually looking for a chart that I used to use that kind of helped demonstrate my approach anyway. So basically what we like to do is focus on risk management, and the only thing that we can control in the stock market at any time ever is our risk exposure. So part of risk exposure is determining the percentages or dollar amounts that you're putting into your trades. So if you, for example, want to put 10% into every swing and you want to have 10 swing trades, you'll have 10 positions which have 10% of your portfolio. So if you're on $1,000 account, that's $100 per swing trade, up to 10 swing trades at a maximum. And then that way you prevent yourself from overcommitting, in theory, right? It's hard to stick to that when you're new, but you'll get there. So we like to break our portfolios up into at least 10% blocks for the most part. And most of the traders here are starting with $500 to $1,000 accounts. We've kind of narrowed that down. And that's why I do a lot of these account demonstrations that are in that range. They're $500 to $1,000. Now, with that said, that doesn't mean you have to use the full 10% for every trade that you take. So if, for example, you want to do a little bit of day trading, a little bit of swing trades to be a little more stable, and then maybe an options trade here and there, you could do 3 of your 10% slots dedicated to day trades, and you would just do one chunk of 10% per day. That way you always have rolling funds. And you could do maybe 6 of those as swing trades, and then the last one just left over for an options trade. That way you're kind of mixing it up a little bit. Now that's a lot to manage as a new trader. So again, you don't have to use your whole portfolio, and that's where that mindset comes in. It's not about making your profits bigger, and it's not about having to be in trades all the time. It's about learning how to make your losses smaller and letting the profits come to you. So I guess to touch on that, if you're on $1,000 account and you're looking to day trade, until you found consistency, and again, I can't legally tell you what to do or not to do, but if it were me, I would just take $100 and just try to day trade with that. I'd do maybe $30 a day, maybe $100 a day. It doesn't really matter what the specific dollar amount is. It's just increasing your risk the more you throw at the market. So the goal, the priority as a trader, is to develop consistency and a skill set before you develop profits. They will happen as long as you can develop that consistency and you maintain things like healthy risk reward. You're obeying your stop losses. You're taking notes to identify optimizations. You can't do that right out the gate if you have all $1,000 on the line and you're trying to track all these different positions or things are moving too quick. You're just going to stress yourself out, and that introduces noise and impulse. I talk very heavily about the specific mechanics of stress in my streams because stress leads to impulse, and impulse has a very defined pathway, both for the cause and the impact it has on our trading. So you really need to be aware of those. And that's kind of why I try to drill down into them when I stream, because that's probably the number one killer of portfolios. It's not the specifics of what you're trading. Like, we know most people get washed out on SPY because they get greedy. But it's just the inability to not hit that button when you see the numbers in front of your face. That's what messes up people the most. If you see a profit on a trade that you weren't in, that's going to trigger stress. It's going to trigger impulse. You're going to feel bad. You're going to feel stressed out because you wanted to be in that trade. Same as when you take a loss and then it runs, or you're going to give that information higher priority than if you stopped out of something and it fell even harder, because you're not going to reward yourself for getting out early for that loss. You're going to punish yourself for getting out early on the profit, because we are biased to want to see profits more than losses. So you really need to get a hold of that psychology before you try to get into the specifics of your trades. So personally, if I had $1,000 and I was a brand new trader, I would probably only keep like $100 around just to trade with that. And you can always just, contribute to your portfolio over time. And then that will help you build that passive savings, right? And then a year from now, or 6 months from now, or a couple of months from now, even when you can put that money to better use, it'll be there for you. But if you throw it all in the market right now and lose it, it's not going to be there for you. So hopefully that makes sense. Slim Pickin 78 says, I do one trade at a time, try to keep options under $100 at a time. That's awesome. Now, that comes with a caveat. So you said it the right way, right? Is what I'm trying to say. So you try to keep those options under $100. So $100 roughly is your maximum potential investment when it comes to an option trade. That doesn't mean if you see a setup, you're going to go look for a contract that happens to be under $100. You're going to look at the contracts that are right for that trade and then see if they're $100 after that. So that's an important step as well, is not trying to force trades just to fit your budget.
Well, I actually personally used to do that exact plan that Slim Pickin. I used to only trade one options at a time.
Yeah.
It was Uber, and typically I try to keep it under. At one point, when I first started off my account, it was $100 at a time. Then as I progressed, it increased. But I did the same exact thing, and because I knew what my budget was, I knew I'm not going to go look for setups in trades, like options trades, like like a Tesla or whatever, that that would have a minimum of of $100 or more. I'd be looking at stocks like Uber, where you can get a day trade options trade for $20 to $45 to $50 usually. Is typically, as if you guys tune in during our Monday options live streams with Swinging Bull, we've traded Uber 3 times so far, and each time is around $40 to $50 an options contract, and it expires that week.
Yeah, that's nice. But so you guys are looking at the setup first, the trade first, and then finding the appropriate contract. You're not finding a good contract and then moving it intentionally just to fit the price. And that's something a lot of newer traders do just to try to get in. And what you end up doing is going so far out of the money that it's just not realistic, or there's not enough volume on that contract. And then the theta eats you alive. So very, very the good strategy where you're just trading one trade at a time and you're seeing it all the way through from beginning to end, because it's that kind of repetition. Like when you're working out, you focus on form rather than just blindly lifting heavy weights just because you can, because that way you don't injure yourself as much. So it's very important to do things right and to do them consistently and thoroughly, and then gradually increase your weight. And
I like that analogy. And that's so true, though. Yeah,
you're gonna snap your shit off.
Work on your form before worrying about the heavy weights. That's great. Before you break yourself. Yeah, exactly.
Progressive overload and controlled negatives. All right.
And it's so easy to want to skip to the heavy weights, or skip your your pre-workout stretching or whatever. But that's your emotions talking, and you might end up hurting yourself.
That's right. Your impulses don't know what's best for you ever. There's rarely a circumstance where impulse is good, unless it's you maybe touching something hot and recoiling. That's about it. When it comes to slower paced decision making that doesn't involve immediate harm, your brain has no idea what the red and the green mean. Your subconscious brain. They're used to seeing threats. Like our ancestors used to have to run away from predators and avoid environmental obstacles and things that could kill us. That has a much different context nowadays, where you're just looking at a screen and seeing red and green bars move up and down. It's not the same input, but it is the same process that your brain has. It's like, oh, I have to resolve this now. I have to throw violence at it and get away.
Throw violence at it.
Yeah. So
that buy button. Yeah.
Yeah. You take an action. You want to physically do something to resolve it, and you don't know what you're doing. All the information in your brain is trying to get out the door at the same time, like people trying to get out of a burning building. Nobody has any hierarchy. So whatever decision just happens to be there first is the one that usually happens, and that's not good for you. So it's important. Yeah, just remain calm, follow the plan, look at the fire exit map before the fire starts, and everyone will get out okay.
Pookie, have you checked out our merch site? Have you seen this new mug? I'm going to show it on the YouTube. This thing,
that's awesome.
I thought it actually is pretty cool. I'm not going to lie.
Yeah. But I told Austin I want to get a hat. I want to get a hat.
A hat?
Yeah, that's all I want.
Will you go on camera then?
I got t-shirts. I got a hoodie. I just want a hat.
The new hoodie was actually one I just got. It's pretty cool. I'm just waiting for some more questions. Oh, I think I see one. Slim Pickin.
Yeah, sorry.
Says I think it was me. I shamelessly plugged our merch. You don't have to be sorry. Slim Pickin was asking saying I think it was Verizon that had some calls at 0.02 premium, a contract. No way that's worth it, right? Why are those even on there? Pookie.
So that is an interesting question. So I actually made 1,000% return on the BlackBerry 2-cent contract.
That's now funny, Verizon BlackBerry.
Yeah. So the reason those are there, okay, is because they're there, and that's it. They're just they weren't worth 2 cents the entire time of that contract. So if I go to Verizon right now, you want to slap my screen on there, bud?
Mm-hmm.
So if I go to the
sorry, I'm just my hands are full. I'm drinking from this amazing mug.
Shameless product. Where is it? Maybe okay, because the market's closed and all that. Never mind. Yeah, so if you look at the contracts and stuff, you're gonna see. I guess there's got to be one with some volume on it. Oh, there's only one. Let's look at something a little more populated. There we go. So if you look at the contracts over time, they're worth 2 cents today because they're expiring tomorrow, or they're so far out of the money they just don't have any. The Greeks have beaten them down. So with contracts, once they're written, they just exist until they expire, right? So they're going to appear in the options chain data. Now we understand the mechanics behind them. We've got the delta, gamma, theta, vega, and the rho, and all that, the Greeks, right? We know that theta is the one that brings them down to here. Okay, it's not the delta, it's not the gamma, it's not the vega. The theta is ultimately what eats away at the contracts. So if you see something that's down here at 1, 2, maybe 3 cents, 5 cents even, it's because the theta has just it's just eroded it so far down. Most of the time it's because you're so close to the expiration date. And that just means that there's less likelihood, or there's less potential to fulfill that contract in the money. So it's just down here as a result of the Greeks. So there is still potential sometimes for some of these to run pretty far. And if you think about it, if you get a 1 cent contract and it goes to 2 cents, that's 100% return. So you're going to see some very big returns on those. But the probability of that happening is very, 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 very low. So there's no point in trying to trade these. There are some people that do, and they're almost exclusively trading catalysts. So if you know that there's some news about to hit, or you're waiting for a specific decision, a lot of times you can take some of these, they're called cheapies. You can take some of these penny contracts out and make some pretty good returns. Like you can see this one here, it says it went up 200% today. That's irrelevant, right? Because there's only been one volume here. It's only had one trade or one transaction today. So even if you have one of these and it runs up 14,000% or something, the likelihood that you're going to get filled because there's no liquidity on these is very, very low. Okay. So, but they can't just go away, right? Because people still can buy them. They still can sell them. It's just not worth it. So there's no participation really. But if you look at, let's say this one, for example, this contract, the initial value of this thing was up here at 25 cents. I'm sorry, 52 cents. I apologize. I was looking at the low, not the high. So when this contract was first written, it was 52 cents. Now it's down to 1 cent. So it just lost its value over time because of theta. Okay, it's the expiration date is right next to us. This contract was written out in February 23rd, 2023, and it's just died, right? It just dies over time. So I guess that's the answer. They're just there because they haven't been expired yet. Like the CBOE can't just remove contracts from the chains data just because they're below a certain price,
Right.
Unfortunately.
Got another question for you from Gator 2020, longtime member. If
Gator.
you have time, could you draw a fib retracement on the? Let me actually pull your screen up for this one then.
Sure.
If you have, I'm just on Discord. If you have time, could you draw a fib retracement on the first half of the day on the 5-minute chart for SPY, and identify where would have been an ideal risk reward entry in either direction? So after about 1 p.m. I like that.
So you're trying to catch this reversal?
Me? I don't know. It wasn't my question.
Yeah. So first off, what I have written here, or what I have drawn here, I'm sorry, is trend. So these diagonal lines are trend, support and resistance trend lines. And I also have horizontal structure. Now these are going to be used going into tomorrow because these are identifiable levels. And if you look to the left here, we've already seen a lot of historical retests of these same levels back in February and back in January. So the levels don't just magically go away. They just are respected in the moment, or they're not respected in the moment. So we need to keep that in mind. So if I just stretch this all the way out to the side here, what I've done here is as a trend is forming, right? So throughout the day, let me just rewind here. So these are all very easy to draw at the end of the day, right? And that's where people get hurt, because you can look back in time and you can say, oh, I saw that trend line. I saw this trend line. I saw that support line. It failed here. This is confirmation bias, right? You're seeing things after the fact that reaffirm what you think you would have seen in the moment.
The hindsight,
and that
right?
gives you false confidence. Yep, it's exactly that. Now, this leads to things like Dunning-Kruger and ultimately FOMO, right? Because you're trying to get in based on what you think. Like you could say, I think this is going to go bullish tomorrow or bearish tomorrow, right? Where we broke this trend line, we're going to support and reject, right? We're going to come down to this gap, right? Now, I can also say, oh, it's going to go up here and break over 408.69. We're going to get a higher high from yesterday. Now, which one do you think is going to be remembered and prioritized in your brain when one of those two solutions happens? It's probably going to be the one that happens, right? Because your brain is just going to forget the other one, or it's going to drop off its priority, and you're not going to remember that you said it sometimes. which is why it's important to physically chart these out so that you can see them and so you can remind yourself in the moment. That way you're not falling victim to confirmation bias and that false confidence. So as a trend is forming, like this is what you're going to see as the market opens, right? You're going to see, and SPY is very notorious for completely disregarding any and all technical analysis at any time. So be very cautious if you do trade SPY. So at market open, right, you saw this level here was pre-market. So this one you could have drawn, this one you could have drawn. You would have only really had these two levels drawn, okay? Came up here, rejected, and you would expect to see a push off this level, but we didn't. So there wouldn't have been an entry there for a call, right? Doesn't necessarily mean you'd have to take a put because, again, we're seeing this after the fact, right? We know just from being alive at the end of the market day, this went down, right? But we wouldn't know that in the moment, okay? All we know is it rejected here and it failed the support line. It didn't push up, okay? So there's no trade here. So you can watch it, boom, draw another level, right? This little inverted head and shoulders. And then it came back up here. This trend line wouldn't have been there, right? It only can be drawn after the highs and lows validate, right? And this is something that we teach in the PBAs. You have to watch for those validations and just wait for these bigger setups to fulfill. So in this case, you could have taken a put here. You could have taken a put here, but this is the direction you want to look at because you have a lower low, lower high, and then you have a break below the previous low. So you would really only be looking for puts at this point, at this time of day, specifically after this candle, right? Now, whether or not you find a good contract is dependent on the moment, right? So you could have taken a put there. But again, you're treading down into uncharted territory here. These lines wouldn't have been here yet. Okay, so you would never know where the bottom is until after it happens. So right around here, or specifically right here, that would have been your bottom, okay, because you're waiting for it to break up. So at this point, you would have probably stopped out of those puts if the theta didn't eat you alive, right? Especially if you're trading 0 days, you're never going to hold it that far down and expect to make a good profit. So most of your profits would have been eaten up right here. Now, as the day goes by, you see there's higher lows here that form. So that's when you draw your support trends lines. When you see highs form, that's when you draw your resistance line. And all you have to do is connect the dots and then wait for things to be invalidated after they've formed, like this support trend line. It invalidated, retested, and then shot down, right? So that would have been a put entry right there. And then you would just lock your profits as appropriate. But more importantly, you'd have stop losses in place because the setup here is this trend line being invalidated. So if it went above this support line, you would probably not be in that trade because you'd be losing at that point because the setup that you saw initially is no longer valid. So I'm going to erase all these lines. I just wanted to illustrate the importance of waiting because a lot of people, especially on the SPY, especially in the 1 minute, they like to jump into things within the first 5 minutes, right? And that you can't do that. There's not enough information there unless you're just trading the volume like traders like Amy and myself. Where you can identify the algos and interpret the time and sales, you're not going to have a good time. So it's very dangerous to try to do that without that kind of experience. And even then, we get it wrong all the time, but we're good at managing our risk, so it's okay. All right, so if I'm drawing a fib on, what do you say, the 5 minute? First half of the day, 5 minutes. Okay, so the Fibonacci retracement. Hey, what's up? You want it all the way to this one? Okay. Okay. So that's okay. So just to paraphrase for those on the stream who are watching the recording, Gator said that he drew a fib and he's working on his risk reward. He just wanted to know when good timing opportunities would have been to take profit and get in and all that. So personally for this, I wouldn't draw my fib down to here. The reason for that is the Fibonacci is intended to measure an impulse. And here you've got a pretty significant pullback. So that's no longer an impulse in my opinion. Now for this target, we had the 50 to 61.8% pullback right there. So that would have been a put trade right there. And that would have, again, it would have only really confirmed right here in this area. So that is very, it's a sketchy day, right? This whole day was kind of sideways and choppy. So it's very dangerous to play SPY unless you're identifying setups here on the 5 or 15-minute chart and you're just trading those scalps on the 1 minute, or maybe the 3 minute or the 5 minute if you're on the 15. But the fib isn't necessarily invalidated if you draw it here. It's just going to offset a little bit, and you have to wait a little longer. So at this point, we've pushed over the 61.8 and confirmed. So the Fibonacci itself, the balance between buyers and sellers, bulls and bears, is invalidated at this point to the downside, right? Doesn't necessarily mean we should just automatically take a bullish entry, but it means that it's technically bullish as far as this impulse is concerned and the retracement, because it just means that more people are bullish at that point than would be a 50-50 mix. Stars, you got a hot mic, bud. Just so you know, so no personal information gets on the stream. So if you did trade this, if you were looking for a bearish entry, you weren't going to get one. If you were trying to do a reversal for the day, you're not going to get one with this Fibonacci, the way it's drawn right now. The only opportunities for reversals that you would really have with the Fib to the downside, let me just erase these, is really just going to be that 25% pullback that we like. And obviously to the upside, we've got a little more opportunity. But another thing you could do is you could draw your Fib on this impulse, right? And then you can start to look for like a retest of this 50 to 61.8% line, which hit perfectly, and then it shot up over previous highs and all that. So that's probably where the best bullish opportunity was, aside from maybe a longer term setup throughout the day. But these two are really the cleanest opportunities you'd have for fibs specifically, at least the way they're intended to be used. Obviously, we got some tricks we could use, but as far as monitoring that 50 to 61.8% level and identifying the strength of the trend in one direction or the other based on the retrace, those are your two best opportunities. And of course, you could only really draw those after those impulses ended. And like, let's say this candle formed, because the bottom is here, it validated, and then you'd have to break up after that. So this right here would be the area where you'd start to watch. And this retest right here in the 56 to 1.8, you'd watch for a break above these previous highs right there for your entry. And that would have been your entry. So your trade really would have only been like that. So as soon as that impulse stopped, you should have been out of the trade, in my opinion. So it's very difficult to trade with the fibs on a day like today. Right. And yeah, I hope so. Now, it's also important to keep in mind, SPY is SPY is SPY. And this information is hindsight, right? We're seeing the chart at the end of the day. Okay. So tomorrow, right, we're not going to see the same behavior on SPY before it happens. We see what might happen today. It might happen tomorrow. But as you can see, SPY has a period of consolidation. It's got a lot of volatile days. It's got drastic movements like this. We really don't know. Like, this is heavy consolidation. It's relatively flat, and then it just kind of slowly meanders to the upside. This is very violent, and then it's flat, and then it kind of meanders to the upside. So it really just depends on what SPY gives you in the moment, and that's why it's so dangerous, because you can't really anticipate these sort of things. You just have to monitor them in the moment and identify which approach is best for you as a trader and which setups you can identify cleanly, specifically for SPY. So hopefully that helps. I'm missing questions here. Slim Pig, I can help you with that right now, bud. Let's do it.
Hey Poogie, let's end it on the YouTube. We're at that hour mark, and we'll stay in the Discord and answer the rest of the questions. Okay, yeah. If anyone is watching the recording and you're gonna miss this fib explanation, catch my stream on Friday morning. I'll do it again. Just remind me so I don't forget, because I have the attention span of a goldfish. Otherwise, yeah, we'll see you there. Sounds good, and we hope that y'all make some bread.
All right.